Hey guys, what's up? Alec back with the daily stock market, and we had that bonus video yesterday. We already talked about all these stocks that were down on Friday. We had a great dividend stock video yesterday, so if you didn't catch that video, make sure you watch the full video because there's some great dividend stocks that we talk about in the last video. But in this video, what we're going to talk about is the cheap stocks, all the stocks that are under $10 per share. We're going to go over some of the best ones. We're going to dive into some of them and give my opinion on some of the top stocks under $10 per share. Now, I know you guys do love when I talk about stocks that are under $10 per share, so smash a big thumbs up on this video, subscribe on YouTube with post notifications on, and without any further ado, let's jump right into the video. Now, needless to say, stocks under $10 per share present more risk than some other stocks that are typically above $10 per share or even above $50 per share, above $100 per share, for example. But starting off this list strong, we have NEO at $10.46 per share. Last week, it was as low as $10.02 per share. And in the last 3 months, we saw it at $9.45. So there's a strong support on NEO right around $10 per share, $9.45. So I think anything under $10 per share for NEO, especially if you're a long-term investor, is going to be great for your portfolio. Now, needless to say, this is a growth stock, a risky stock. It's not a value stock. If we scroll down, we can see that it's not even a profitable company and it has an $18 billion market cap. We can also see as a 52-week high of $43 per share. So if it does revisit that 52-week high, that could be a 300 to 400% gain on your money. Here we can see the profitability is getting worse on the EPS if we're looking at quarter over quarter. But if you're investing in something like NEO, you understand that it's a risky stock. You understand that you're in it for the long term. And you also understand that it could have extreme growth that it hasn't reached to yet. So here we see some bulls saying younger generation car buyers value vehicle tech experience, giving NEO leadership compared to legacy car makers. Advancing battery technology and charging solutions with ease, range anxiety on electric cars. So NEO's doing like a battery swaps where you can get a full charge in 5 minutes. They found a way where they can take the battery out and input a new one. So it's definitely a unique thing what they're doing. You know, it could be good, could be bad. It's an unproven model thus far, making it very risky, but with huge growth potential. And we also know that NEO is going for that premium brand image. If we jump into their income statement and their balance sheet, we can see the last 3 years have been all unprofitable, not even a shot at profitability so far. So we definitely want to see profitability coming for NEO in the next 1 to 2 years. However, we can see the increase of revenue growth is tremendous. Obviously, they can even 10x their revenue from here. Look at Tesla, for example, and if we scroll down to their balance sheet, we can see it has a 54% debt to asset ratio. I've done videos in the past where I've compared NEO's financial statements, its total revenue, its net income, its balance sheet, assets, liabilities, to XPEV, Li Automotives, and also Tesla, because these balance sheet and net incomes and total revenue and everything in between, when it comes to the fundamental investing, it has a lot more meaning when you start comparing it to some of its biggest competitors. So that's what I personally like to do. If you have some free time after this video, you can do that as well. But the balance sheet on NEO actually looks good. I would say that there's a very low probability of NEO going bankrupt in the near future at all. Moving on to the next top stock under $10 per share. This one's closer to $5 per share. Okay, we have SOFI Technologies down 12% in the week, and in the last 3 months, it's down 20%. But in the last year, it's had an absolute catastrophe, just like most other stocks under $10 per share have had, also down 74% in the past year. And there's been all-time highs of SOFI around $25 per share. So if you believe that SoFi can get to new all-time highs again, that can be as much as a 500% gain. We see SoFi Technologies provides financial services. It offers home loans, personal loans, in-school loans, and a credit card also. SoFi Technology develops non-lending financial products such as money management and investing product offerings. So they're pretty much like the same thing as a bank. We can see that they are an unprofitable company. because they don't have a PE ratio. All right. And if we look at the market cap, it's 4.8 billion also. Now, if we continue to scroll down, we can see that they are getting closer and closer to profitability, and they're basically at the break even of profitability. So in 2023 and 2024, we can start seeing SoFi trending towards profitability, which is strongly going to help its stock price go back above $10 per share, closer to $15, $20 per share once again. Now, there's no guarantee that SoFi can make it to $20 per share once again. There's obviously a chance. We can see some bullish things about SoFi. SoFi has enjoyed rapid growth driven by the introduction of new products and broader adoption of digital banking. They're also doing student loans now, which has generated the rapid growth as well. SoFi has managed to rapidly launch an impressive array of products and services, and the company remains the only firm offering digital full service model, which is an interesting business model. But keep in mind, the main risk is something like JPM or Bank of America could adapt SoFi's business model and start to crush them. Some more bearish things and risks, by the way. Many of SoFi products and services are the result of partnerships or are easy to replicate. See? So JPM could easily replicate it, creating the risk of future competition. SoFi's near-term results will be affected by uncertainty surrounding the political student lending. Okay, like we kind of went over already. SoFi's revenue growth comes at a cost of rapid growth in the company's expenses, and SoFi remains unprofitable. But they are getting closer to that profitability, which is a huge, huge thing for SoFi stock price. If you want to see SoFi do good, we want to see this EPS keep trending higher and higher and higher. And we also want to see them keep beating earnings quarter over quarter. Now, if we pull up that quarter over quarter net income, we can see that they were close to profitability in 2021, also only negative 30 million. That was their best quarter, and then they started slacking again. So keep a close eye on that quarter over quarter net income specifically and EPS. Make sure those are trending up. It's the two most important things to watch for on SoFi. Balance sheet is a little bit risky. We have debt to assets 65%, and we can see that quarter over quarter, it's gone up tremendously. Okay, just in 2021 Q3, it was a 43% debt to asset ratio, and present day it's closer to 65%, which is a huge, 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 huge red flag for me personally. And, could be a sign of bankruptcy in the future. Obviously, do not, a huge red flag, the biggest one of all would be if we saw the debt to asset ratio trend above 80%. So make sure you're keeping a close eye on the balance sheet is something to really pay attention to on SoFi, because if it gets trending in that wrong direction, the debt to asset ratio goes above 80%. That's something that will personally cause the most concern for me, or any SoFi investor should be concerned about that. The third stock under $10 per share that we're going to be talking about in this video is Snapchat, ticker symbol SNAP. Okay, they're at $10.50. So they also have a pretty strong support around $10 per share, like the first stock we talked about. However, with Snapchat, we've seen them as low as $7 per share. But that was kind of an anomaly. I would say if you can get Snapchat under $10 per share, that could be a good swing trade. Obviously, there's tons of risk, so we're going to dive a little bit deeper in the segment of the video, some of the risks, so make sure you stick around for that. Now, we also see that Snapchat's down 80% just in the last year. It has been a trend for most of the stocks that we talked about in the video that they're down around 80% or so in the past year, with Snapchat potential growth around 300 to 500% gains. And, that could take as long as 2 to 3 years, but that's still tremendous growth. In the last 5 years, we saw Snapchat as low as $5 per share. So Snapchat's definitely an interesting company. They're an unprofitable company as well. They have a $17 billion market cap. And if we scroll down, we can see that EPS was profitable about 12 months ago, and it fell to unprofitability again. So Snapchat's another stock that could easily clean up their EPS and their net income, their profitability, and the stock price could start heading up as well. Now, let's talk about some more risks with Snapchat. By issuing only non-voting shares for its initial public offering, Snapchat's management is protecting its control over the firm, which can be viewed as a significant risk, which is something I actually didn't even take into consideration at all. So you definitely have to take that into consideration before investing in Snapchat. Snapchat is late getting to the market, which Facebook dominates. Facebook owns Instagram, WhatsApp, Facebook, Oculus. Many of its users may also belong to other social networks such as Facebook, so firms will continually have to fight to capture new users, their time, and their interactions. Snapchat may struggle to capture enough digital advertising dollars from the incumbent platform like Google, Facebook, or Twitter in order to drive the firm's profitability. And I think Google is a huge risk to them as well, because a lot of advertisers that are paying for ads, they're just doing Google ads or YouTube ads now. And YouTube is trying to do shorts. Instagram's trying to do reels. Okay, so there's a lot of things to be bearish about and a lot of risks, but there's also some good things with Snapchat. They have a strong loyalty and a strong fan base of younger users. Okay, so if we look at their net income for Snapchat, it actually, it looks bad at first glance, but it actually is pretty good because we can see that they are trending closer and closer to profitability year over year. So once Snapchat actually gets to that profitability, their stock price could grow. We also could see that they are an absolute revenue beast, a revenue monster, growing revenues by around 40% to 60% year over year. Every year. In 2017, they're at 800 million in revenue, and now they're at 4.1 billion. So congratulations, Snapchat. If we scroll down, we can see their balance sheet isn't nearly a risk as the last stock we talked about on SOFI. Now we can see that in 2017, the assets to liabilities, the debt to asset ratio, was only 12%, which is outstanding, one of the best balance sheets in the whole stock market. But if we fast forward to 2021 and their most recent statements, we can see it's closer to 49%, which isn't the worst thing in the world. It's not the best thing in the world. Typically, I like to see it under 25 or under 30%, and I don't like to see it above 60%. Okay, so they definitely fall into the good area of a balance sheet. I wouldn't be worried about Snapchat going into turmoil or anything like that anytime soon, as long as they're not trending. Like example, 2018 to 2019, see how much, look at their liabilities grew by like 3x in 1 year. So that's a little concerning. We don't want to see something like that happen again. So just pay attention if you're a Snapchat investor to the balance sheet, because we don't want to see those liabilities 3x again in like 1 or 2 years, because that'll push their debt to asset ratio tremendously higher. And it's actually concerning that they have such a big jump in 1 year. But their CEO probably realized, look, we're only at 14% debt to asset ratio. We can take on a little bit more liabilities to improve our bottom line and our top line. So I hope you guys appreciate that 3 stocks under $10 per share. Let me know if you guys want part 2 for those top stocks under $10 per share. I know you guys appreciate those videos. I try to dive a little bit deeper into some of these stocks, but I didn't want to go too deep going into articles and everything too. So let me know if you guys want me to go even deeper in the next video, or if you kind of just like those quick updates. If you want to join the close friends list, here's the highlight section. The green ones that say the close friends list, you won't see because you're not on the close friends list yet. But if you click on success number 6 or success number 5, there's tons of success stories and clients' testimonials of success they've had with the program. Hundreds of dollars made in just a trade. Some students make as much as thousands of dollars per trade here. So take some time, read through some of those testimonials, see if it's something that you're interested in getting more familiar with option trading. All right. A lot of these trades are option trades. Some of them are swing trades. We do swing trades. We also do long-term investing, but these ones that you see like $1,900 in one trade, that's all option trading, and it's a great skill to learn. So if you're a beginner in the stock market and you want to learn more about those 3 types of investing, 3 pillars of investing: option trading, swing trading, and long-term investing, go ahead and message me here on Instagram. I respond to every single message. So I'll go ahead and get back to you, shoot you over an application, ask us a few questions so that way I can help you out the best way possible. Then I'll shoot you over my website so you can check out everything for yourself, see how much the program costs, and if it makes sense to you and if it's inside your budget, let's go ahead and make some money with the stock market. Hundreds of other students have already been doing it. We now have over 2,000 total signups on the program, so a huge community of investors. Go ahead and reach out to me on Instagram. Thank you guys for all the love and support you've been showing on the videos. Make sure you're subscribed with post notifications on so you're alerted when the new ones come out. As long as you keep liking these videos, I'll keep making them for you. Share this video with a friend if you think that they will find it helpful, and I'll see you guys in the next video. Remember, don't time the market, buy the market. Peace.